And welcome back, George. How are you? All
Always a
right.
compliment to be here. I appreciate it. And if you want, I can speak to it anyway because it's pretty broad strokes. But if you want to permission me to share a screen,
Yes.
I'll just throw my central thesis here.
All right. Go ahead.
Okay.
Central. So does that make it purple?
Well, what you should see is Wilshire 5000 to corporate profit.
Okay. All right. So the straight line is projected or where
Yeah,
corporate profits
it's
are.
not to get too deep in this, but this is simply the independent x-axis is corporate profit. This is lifted off the BEA tables, NIPA table 6. And then for some strange reason, the BEA includes Federal Reserve profit and loss in this grouping. So you got to take that out. And what you're seeing here of corporate profit is the private sector corporate profit of the United States. And then the Wilshire 5000, of course, the Wilshire 5000, which is the broadest based stock indice that there
Right.
is. There's no Fab 7 in the Wilshire 5000, although it does have impact. The basic thesis is that corporate profits and the economy have been booming ever since COVID. Since the COVID remedies kicked in, they've been about 2-3 times more than what was required to just get it out of the recession from COVID. And then they've carried on with the CHIPS Act and Inflation Reduction Act and so on and so forth. So the fundamental picture is that this U.S. economy is roaring. It's going to continue to roar, election or not. It will. It's got at least another year's momentum in it. So therefore, what you got to track is how risky assets are pricing to the fundamentals, and they're still pricing to an idea that the Fed's going to come up and take the punch bowl away. And the Fed has shown no ability to do that since 2014 or so. But people persist with, it's going to be one discount rate cut, two discount rates, tastes good, less filling, all sorts of arguments about monetary policy, which are really not applicable right now. Now, that means that this market sooner or later will have a good, 20%, 30% more climb to go. This is what I said last time we talked. And I think the best expression of that is JP Morgan, not the Wilshire 5000. And you warned me that JP Morgan was a little weak, and it certainly did get interesting for a week or so after we last talked. But it carried on, and you started hitting all-time record, never seen in history highs. But that was a couple of weeks ago. Now, having said all this, I'm very firmly in your camp, such as I heard it. The first time since October of 2022, when I just went 100% long, and at times I'm actually leveraged long. I have gone to cash 2 weeks ago. I'm pretty well all cash right now. I don't know what the hell's going to happen out of this election. I just think it's going to be very interesting, and I don't think interesting is a good fundamental or technical thesis for like
Yeah.
why you should be at risk.
Yeah.
So
Interesting is
I'm just a
something.
bystander now.
Yeah.
Hmm?
Interesting is something when you have a Modelo, right?
That's right.
Is that
I don't know if I'd go there,
it?
but but yes, I understand your logic. Put it that way.
So
Um,
what are these dots that are
well,
on
these
the
dots
charts
are
too?
just each dot is well. I have the colored dots are perhaps too small or just various key dates.
I see.
The
Okay.
one that purple dot is, I think, the most interesting one, which was October 13th of 2022. That was when JP
Okay.
Morgan, despite everything that Jamie Dimon was saying and everyone was saying about the economy, the Fed's going to tighten. It's going to, at that time it was 4% odd. It's going to go to 5.38, and, we're all going to die. JP Morgan just had no choice because of SEC and FASB and other sort of requirements to give a rip-roaring surprise earnings. And they've continued to do that, earnings after earnings. A brief rest, but basically 9 earnings in a row where it was just, boy, this economy is strong. And you can say whatever the hell you want about the Fed or anything else, but this economy has got a couple trillion, 3 trillion odd more than it should have from the government. and it's roaring. Probably too hot.
So
Probably it's going to end up
all of
badly, but
this.
not this year.
Yeah. So
Pardon?
um, what's going to be your sign, or what is it that's telling you it could only go a year? There are people saying it could go for
Well,
years.
well, I've
So you
already
must
I've already
be
made
seeing
that.
something,
Yeah, what I'm seeing right now is why I'm in cash is I am completely mystified as to what the hell's going to happen with this election. I don't know. Are we going to get militiamen running around shooting people? Are we going to get Trump? And the problem with the risk of the election is not so much that Trump's going to win or Harris is going to win, but the
is that we
system
won't
such as,
know.
yeah, we don't know. And I think we're going to come in on a 50-50. So the riskiest position is not 54 to 46, or
Right.
Trump clearly wins and I'm really upset, or Harris clearly wins and I'm really upset. It's going to be
Never
that
going to
it's
happen.
50-50, right? And there's going to be all sorts of room, such that I think it ends in front of the Supreme Court, like
Right.
Gore versus Bush. And then there's going to be accusations like, well, Trump owns the Supreme Court or not, and it doesn't really matter what the reality is. It's just going to be a hell of a commotion.
Yeah.
And risky assets in the United States are the buying and selling of contracts under law. I mean, that's just we assume we take that for granted so that we don't even actually look at it closely. But whenever the law it gets a little challenged, even slightly, then everything can go to hell. And in a very sort of option math point of view, that's a jump to fusion. So I think after whatever the shit happens will happen, and then we'll go right back on track in terms of what my central observation is, which is this graph here. I don't think it's going to be enough to upset corporate profits or GDP. There's just too much money in the
So
system
it
anyway.
could just be a de-risking, just like you're doing, only
Right,
the
right.
big guys do the same thing.
Right. So after we get the election and after we figure out what the hell's going on and where the price level comes, um, then I'm willing to accept that 5%, 10% that I might miss because of I didn't have a strong enough courage to go through it. But on the other hand, I think I can miss a lot more pain, which will make it difficult to get back on track. So I'm a spectator now.
Okay. That's a position. Cash is a position.
Yeah.
People forget that. They don't think
Yep.
is they think
Definitely
they
is.
have they think they have to rotate or they get a red flag like in soccer.
Right.
Okay. You
Right.
get
And also it is a position at risk because of inflation.
okay.
Sitting in
Yeah.
cash means I get an automatic hit of like 3% a year.
Yeah.
So that's a bit of a handicap to claim any sort of income. But on the other hand, I do get like 5% return just by sitting in money markets.
Or we could just leverage you on a yen position and you can make 195% in a week. And a
I
day.
have enough trouble with J.P.
You're
Morgan. I'll leave yen and all that stuff to you experts.
oh, come on, man. Short the end with me, George. In fact, the volatility the volatility has been so benign
Yeah.
in
Yes.
FX lately
Yeah. Yeah.
that ARP has approved for their membership that they could trade currencies.
Well,
I mean, you're a member of ARP. You could trade
yes, I
the
do, and
you
I think
you
that
could
that to
trade
me that's
euro.
just proof that there's just bad times coming. But I don't know what it is, and I can't even comment on it.
I'm
Uh,
kidding you.
I can talk.
View on rates. Did you find it unusual? I was expecting maybe a sell the rumor, buy the fact, and that yields would bounce back after the cut, but the move was kind of outsized, more than I thought we would get
Well,
right after the
I
cut.
think what's happening is I think your approach and a good, rigorous technical analysis with stops is perhaps the only way to approach rates right now. I think
Okay.
to look at the fundamentals or have an
Yeah.
idea of like this inane quarterly refunding stuff and supply and demand of flows, and Yellen's up to tricky stuff with her account with the Fed. is just it's just a head scratcher that why reasonable people would even think about it. However, it is an expression of sentiment, and I think that means that probably the only way to go right now for rates um, is to have stops and say, well, it's got to whatever you got, whatever. I'm not an expert in technical analysis, you are, but there's a triple bottom, so it's going up, and I think that's the best way and perhaps the only way to trade rates right now.
Do
I
you have
think
a view
rates.
on which way they're going?
Well, I think in the long run, I think we're going to still, like as I said last time we talked, and I think I've said the priors for about a year now, is that the U.S. economy and GDP will define rates. Hey, I was complimented that Druckenmiller's obviously following me on X because he said the same thing last week.
Okay.
Joking aside, I don't know if he is or not, but maybe he is.
Yeah.
NGDP defines U.S. Treasury 10 years in the end. Always has, always will, and that's based on really sound, not just theory, but actual just
Well,
dogma.
if there's
Um,
another 20% left in risk in equities,
yeah,
I don't know if that's a friendly environment for bonds, all that growth and all that supply.
I'm going to correct you a bit with
Sure.
respect, but that way of thinking is all new, is especially if you're an old knuckle like an old guy like me. Is that that came to us from 2014 on. Before that, an equity rally was highly correlated to rising rates, and dropping rates was highly correlated to dropping equity. Um, and it all turned around when the Fed started to have a heavy hand, and for other reasons, rates started to disassociate themselves from the economy as well as equities. Now it's a free, it's a potpourri. Any character can come up with like a secret sauce, goofy idea and have an audience. I mean, why not? There's no evidence of the market moving to correct him. There's no Fed announcement in terms of what they're going to do this week that will correct him. It's all, have at it. It's open season for craziness.
Well, I have
So
to say
what?
that the bonds
Yeah,
put on the hugest bear move of my career in the last couple of years. They've been in a basing formation since they
yes,
got down to
yes,
82. But I mean, they went from 140 to 82. Okay.
yeah. And if I were on if you're having this forum, say, I don't know, 2006 or 1998 or 1988. I'd be able to table all sorts of charts, graphs, and heavy hitter theorists to show that this is what should happen if the economy is expanding and equity is going to go up. Yet this fog is allowing everyone, and they have like a base, a year or so data here and there that, rates go up, equity goes down. That's just not valid. It just won't hold. Now, when it shows that I'm a genius, and it's not me, by the way, there's several tens of thousands of people before me with this idea. Druckenmiller, when rates go up and equity goes up, then I can do a victory lap. But from getting from here to there is going to be pretty. There's going to be a lot of volatility, more than enough time where um, it will empirically prove what you said
Where did you
or were based
deploy?
on.
What part of the curve did you deploy your cash into?
I don't see cash as like the same 5 year, 10 year, 30 year. I just check for all my contractual stuff that I have a choice. I just picked the lowest
90-day
yielding money
T-bills?
market fund because I figured that that's going to be T-bills. And then as far as my own like the real money, I it's cash like dollars in my broker's account. So my broker
Okay.
goes belly up, then I guess I got a problem, but it's just cash.
Okay. Now, someone asked me a question. What do you think is safer, George? You've been around a long time. A stock account or a checking account?
I think what's the safest thing to do? Well, first of all, it's all the Federal Reserve System. So one way or the other, it's all just part of the U.S. government. Um, and I don't it's not an issue. Um,
Okay.
so I think that should be is does your checking account get the same amount of interest as your money
I'm
market
talking
fund?
about what's safer.
I think they're pari passu. They're the same.
They're the same.
Yeah.
Okay. Did you read about that bank in Oklahoma that folded last week? And there is talk about,
Oh, there
all
is
these banks going away. And I think they,
right. Well, if
different
you
than SVB, they didn't have that backup facility. And I think depositors only had access to half of their cash.
yeah, if you allow me, okay, but as usual, let me correct myself and backpedal quickly, but I don't have to go far. I'm talking about banks that are in the Federal Reserve System.
Okay. All right. The big boys.
Well, even Silicon Valley wasn't a risk, put it that way.
Okay.
And First Republic wasn't a risk. There might be a bit of a fright for a week or so, which you might not want. So just go to JP Morgan Chase.
There's some great advice. Okay. Uh, George, I always enjoyed talking to you. You have a lot of conviction about what you said. You've been right. And that's good news that, there's at least another year of a
I
bull market. Yeah.
I tell you though, Dale, I'm like it's like I'm a new
Newborn
member of the
baby.
AA guys. I have never been so nervous or scared to be in so much cash.
Yeah.
it's
All right.
it's
Well, you
very
know what?
unpleasant.
It's only money.
Yeah, well, I keep saying that, but as I said, I'm still scared out of
Uh,
my wits to be in nothing
uh,
but cash here.
it's not a biopsy. It's only money. If I have to put it in perspective for you. All right, bro?
I appreciate that,
That's why
and
I always end every show with don't just count your money, just don't count all your material stuff. You know what? We need to count our blessings
yeah,
while they're
go
still out there.
go
So,
find grace, and money will never give
yeah.
you grace. There you go. I'm right
All
with you.
right. George, I like you. You're my friend. It was great to talk to you today. Best place for people to find you. I know you have a Substack. You want to show it?
It's the Monetary Frontier. I don't have it up right now. We'd have to wait for it, but it's pretty easy. The Monetary Frontier,
Okay.
uh,
Frontier.
Substack, whatever. And then
Well, I'll wear my
on
cow. I'll put my cowboy boots on before I read it. But go ahead.
and I
Oh,
think the
look,
reason.
Mandy
Pardon?
put it. Mandy put it up in text. The Monetary Frontier
Oh yeah, I
Substack.
appreciate that. Thank you very much.
See, you already have fans from being here.
Well, I think this is I'm very sincere. I'm blowing a little smoke. What the hell? Because I'm complimented to get on here, but I really think this is the day and age of technical analysis. That all us ex-Solly guys and pontificating and not deigning to look at triple bottoms. I think those days, for now at least, are over. And you either have rigorous stops and risk control, and the charts are just as good, if not better, than all the crap that's going around right now.
Yeah.
This is the day of the technical analysis.
I tie into the school of Nostra Pinkert. So I'm a forecaster. And tonight it will be dark, getting lighter in the morning. All right, that's my forecast. That's my George
I
Carlin forecast for you. Huh?
I'm right with you, Dale. And the other the thing on all this is that I true technical analysis guys, they never sweat when they're wrong. They just see that as like more opportunity.
It's like
And
getting it's a traffic ticket, man.
it's a track. Oh, okay. Well, I should turn left, not right. Okay, now I'll turn left.
Yeah,
I
yeah.
think
There.
to have that dispassion is the right way to go here.
All right. Well, I'm not attached. I bite all my fingernails off when I put a trade on. And I get very nervous before interviews. So it's all just like, my game face, bro. Anyway,
Okay.
George, all right, great talking to you. And, um, good luck. If you're interested, I would help you time an entry. But
I,
I'm looking,
you already have, sir.
I have, okay, good.
And at least, at the very least, it's very valuable to me is that I think we have different perspectives on how to approach the market, but it's very interesting that you and I have the same analysis of the importance of this election.
Yeah, yeah.
That's very interesting.
Yeah, I told people to buy bonds today.
Ah, I, well, let's leave it at
Yeah.
that. Let's
All right.
you
All right.
know.
I love striking terror into the hearts of, you know,
Ah.
fundamentalists.
Yeah, but what you don't
Hey,
tell them is that you got a heavy stop. You would say,
yeah.
yeah, buy bonds,
Oh
but
yeah.
you're out of
Yeah.
there and creates a point down. So,
Yeah, I could be out right
uh,
now while I'm talking to you. So anyway, I
right.
have no
So
idea.
when people hear that, they don't realize the rigor of the discipline when you make those calls.
Yeah. Yeah, I think this yield rally is peaking short term anyway.
Yeah.
Okay,
Yeah.
George, thank you so much. Perhaps, my Twitter account got hacked. So I want to be able to book your next date with you. Can you send the email DM ForexAnalytix and they'll get your email to me until I'm
Yeah,
unhacked?
I'll figure it out. If I got to get off and write down that email, and I'm not as cognitively swift as I used to be. If
No,
it might be
give them your email.
right. Who do I give the email
Just
to?
the Forex Analytics Twitter account. Say this is for Dale and leave your address.
Okay, will do, Dale. And I look forward to our next conversation. And as I said, I take it as a big compliment.
Well, it'll be next year, buddy. So
Yeah, but there's a lot of
good.
things, a lot of interesting things to talk about by that
Yeah,
time.
Brave New World, good hunting. In the meantime, I'm a fan, George.
Okay, and tell me again why you shouldn't freak out being in nothing but cash. I need a shrink right now. Probably not
Okay,
a.
all right. Well, I'm a trading psychiatrist. I'd recommend you just turn off your machine and your television and
What?
go
Oh hell,
fishing.
you're fired. You're
You
a
just
shitty
go,
shrink right off the bat. I can't do
just
that.
go.
You know.
Yeah, you have to. You have to just let go. That's
All
my
right, I
diagnosis.
appreciate it.
All right. Take it
Okay.
easy.
Yeah. Bye
George
bye.
Robertson, everybody, at Bicker and Brattle on X. Follow George. Mandy's already doing it. Adios, everyone.
All right. Bye bye. Thanks a lot.
Thanks, George.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.